Hi guys, welcome back to Father and Son Investing. This video today is going to be about TransMedics. This is a buy request for Edmund Price. I made a promise or said that I would at least do a video and get it out today. So this is a fulfillment of that buy request for Edmund Price. Now TransMedics, it's not a super popular company at the moment. In fact, there's only 30 million shares out there. So I'm not expecting a ton of YouTube views for this video. Nevertheless, I like this company, and for those of you who watch this video, I hope you'll get some valuable information that will help you over other investors who haven't watched this video or paid attention to the earnings call. We're going to cover three things in this video. First, I want to talk about the third quarter results. That's what really drove the price of this stock up. If you look here at the Google Finance page for TransMedics, you'll see that on the year it's up 74%. But yesterday it was up at just about 20% by itself. So we'll talk first about the Q3 results. Then I want to talk about the earnings call. There are a lot of people I think out there who don't pay attention to the earnings call and what goes on inside there. If you haven't paid attention to that, I'll give you a little bit of a clue there about what happened. But if you're really an investor in TransMedics, you probably need to listen to that earnings call. And then lastly, I'll talk about whether I think this is a time to buy now. Is this stock just going to continue to run up? Or do I think there might be a buying opportunity coming up in the near future? So stay tuned. All right, let's just cut to the chase here. Why did the stock rise 20% yesterday? This is it. I think there's a lot of people out there who know nothing about this company, but this is what they saw. 378% increase in revenue year over year for the third quarter. Anytime a company does something like that, they garner a lot of attention in the stock market. Now, just what is it that they did in terms of revenue for the third quarter? $25.5 million. Look back to 2021, third quarter, it was a little more than $5 million in revenue. Amazing results there. And when we're looking at the 9 months for the year, we'll see that it's about 3 times the revenue as it was in 2021. In fact, they did more in one quarter, the third quarter this year, than they did in the first 3 quarters of last year, where they only had about $20.5 million in revenue. So this company is really ramping up there. Now, that's not the only thing going on with this company. Let's look at more of this data and we'll see where they are really improving. Let's look at the operating expenses. Now, if you're looking, you'll see that yes, the operating expenses are more than they were last year. Not significantly more. It was only $5 million last year and $6.8 million this year. When we look at their cost of selling in general, it's significantly more, $10 million versus almost $17 million. But because of the net revenue, we will see that their loss from operations is decreasing significantly here. Last year, third quarter alone, they lost almost $12 million. Now they're down to $5.5 million. As I look at this, I see that they're getting dangerously close to becoming profitable. I personally think that they may actually pull that off in 2023, if not, definitely in 2024. All right, let's turn to item number 2. Let's look at the conference call and see how that may help investors. First of all, I want to talk about the company's guidance. Now, they raised their revenue guidance for the year. It was at 67 to 75 million for the year is what they anticipated. They raised that to 80 to 85 million. So let's just look at some of the numbers right here. We know that through the first 9 months, they did a little bit more than 62 million. So if we're going to get to 80 to 85 million, you can see that they're only going to add about 18 to 23 million for the fourth quarter. Now, what does that tell you? Let's just look here for the third quarter. They did 25.5 million. They're saying then, without saying it, that their revenue in the fourth quarter is going to decrease. Now, we're going to look at the conference call to figure out why their revenue might decrease in the fourth quarter when they've been doing such gangbuster increase in revenue year over year. Here is what you need to know about what's going on with the company. It's a good problem to have, but still a problem. The problem is that they are having difficulty keeping up with demand. Enough that during the year this year, they've already added a second shift to the process of trying to produce these sterile perfusion modules. That's the thing that actually supplies the nutrients to an organ while it waits to get transplanted. They have added a second shift trying to increase the number of these units that they can produce, but that really isn't enough. In fact, they have a new facility that's about ready to come online. It's going to have the capability to produce 3 times the volume of these units, but it's not ready to go yet. And the company, therefore, is really, they described it as hand to mouth. They really are hand to mouth right now. As soon as they can make these things, man, they're ready to get used. And that is a problem because any little disruption in their process is really going to hamper their business. They also talked about some other reasons why their revenue may go down. They talked about 3 weeks of vacation coming up, typically around the Thanksgiving holiday, the Christmas holiday, and the New Year's holiday here in the United States. A lot of people on vacation, and therefore the number of these units getting produced going down as well. Now, it really is just their capability to produce these perfusion modules. They said in the conference call that they've got 18 to 24 months of raw materials and the solutions that they use to perfuse these transplanted organs. That's the big problem, though, is being able to produce these modules. And they're trying their best. They've added that second shift, but they have what is a good problem: increased demand more than they can supply at the moment. Now, that's the end of the bad news as far as I am concerned. Everything else seemed like pretty much good news in this particular conference call. What else are they doing here that's really good? Well, they are expanding their NOP program. This company has a lot of acronyms. NOP, it stands for National OCS Program. Of course, OCS is their organ care system. You'll also hear them talking about DBD and DCD and all sorts of acronyms when it comes to TransMedics and what they do. What are they doing to expand this NOP program? Well, they are working with some transplant logistics experts out there to create a partnership to move these organs around the country more efficiently. That involves air transport as well as ground transport. They are also growing this NOP program by really concentrating on the transplant centers that are using them. They have found that once transplant centers start to use their services, that they continue to use their services. So transplant centers who aren't using them very often, while they still will work with them, they are not concentrating their efforts there. They are also working to grow the number of hubs that they have for their NOP program. This gives you an example of where some of these hubs are at. You'll see that they are in large cities, but you'll also see that there are some significant areas of the country that are underrepresented, particularly the Mountain West and some of the Midwest there. There are some large cities out there still: Kansas City, Salt Lake City, Denver. None of those are showing up on this particular map. This map is a little bit outdated, but still it gives you some idea of how these hubs are looking and where they're at. Now, just the last thing that I'll mention from the conference call before we move on to item number 3, and that is just the increased utilization of this OCS system, particularly for heart and liver. In fact, the liver sequential quarter over quarter was an increase of 30% in usage, and for the heart, it was an increase in 40% sequential usage. Now, OCS lung is running significantly behind these other two in terms of usage and revenue, and a lot of that was attributable to the COVID pandemic and really what I think in the way that COVID tends to affect lungs. Now, I wrote 2 pages of notes, but we're not going to go into that anymore. Let's go on to item number 3. Is now a good time to be buying TransMedics stock, or might there be a buying opportunity coming up? Here's my opinion. Number 1, I think that this huge increase in the stock price, 20% in one day, is going to be short-lived. Why do I think that? Well, I think there's a lot of people out there who know nothing about the company that just simply saw this huge revenue increase and decided, hey, let's jump on this. I think that stock price is coming back down, maybe slowly, maybe quickly, to where it was on Thursday versus Friday. What else do I think about this? Well, I mentioned it earlier, and that is that although they have increased their guidance, that quarter over quarter, the revenue is either going to be flat or potentially lower for the fourth quarter. When those quarter results come out, again, I think the people out there who know nothing about the company are just going to see poor growth or negative growth, and they're going to start bailing. And that is when I think that there may be a buying opportunity. So we're looking at February of 2023. Now, I am certainly not a fortune teller, and with as volatile as this stock has been over the last 5 years. Anything could happen here. Certainly the stock could take off on a run, and I will be proved wrong and should have purchased it here at 55 instead of waiting. Nevertheless, that's my opinion. I think there's going to be a buying opportunity in February when those fourth quarter results come out. Let me just give my long-term outlook for the company now as we wrap this up. I think this company is going to make a lot of money in the next 5 to 10 years. Why? Because they are really the only company out there who's got the FDA approval for this type of device. And they've got a lot of patents here when it comes to this to keep the competition away. Not only that, but the adoption of this instrument, this OCS machine, I think is only going to increase. The data out there says that for organs that use this machine, that there are fewer complications for the transplant patients. Not only that, but they're able to use organs that might not have been usable, particularly for the DCD patients. Those are donors after cardiac death or circulatory death. So rather than having a brain dead patient and taking a beating heart from them, they take patients whose heart has stopped and then they put them on these machines. That is an area where cardiac transplants are just going to grow like crazy, in my opinion. So I think this company is only going to follow the path of some other big name or big time medical supply or device companies. I'm thinking of Intuitive Surgical. I would not be surprised if 5 years down the road, the stock price for TransMedics is at $250 a share. Realize that this is a risky stock. It certainly has been volatile, as you can see. They only went public back in 2019, so the stock hasn't been around that long. And again, there's only 30 million shares out there. Compare that to another medical company that I really like and which I own stock in is Senseonics, SENS, and they have 465 million shares out there. All right, that's going to wrap up this discussion for TransMedics. Again, I hope this was useful for you. If it was, give us a thumbs up. I know that not that many of you are going to watch this video, so I really need the thumbs up there. And share this kind of information with a young person in your life. Do not encourage them to go all in on this company, in my opinion, because again, this is kind of a little bit of a risky one. I've given you some ideas of where I think it's going, but that does not guarantee that's what's going to happen. Until next time, enjoy your investing.